Hi, this is Professor Cataldo, and I'm going to introduce the early part of the accounting cycle, focusing primarily on journalizing and posting. So this PowerPoint is designed for someone taking an introductory financial accounting course. This material is usually covered in the second or third chapter of the text. There's the accounting cycle. So first, you analyze transactions. Is it a cash receipt? Is it a cash disbursement? That will be easy to identify because it involves your checking account for the business. If it's a credit sale, a sale on account that does not involve cash, it goes in the sales journal. If it's a credit purchase, a purchase that does not involve cash, it's going to go in the purchases journal. So now I'm going to look at the journals, and then I'm going to look at how they're posted to the general ledger. This is a very broad brushstroke. I'm focusing on item number 1, item number 2, item number 3. I want to keep these PowerPoint slides very short. So, what journal am I going to record the initial transaction is in? I'm analyzing transactions. Well, if it's a cash receipts, it goes in the cash receipts journal. If it's a cash disbursement, it goes in the cash disbursements journal. If it's a sale on account involving no cash, it goes in the sales journal. If it's a purchase on account involving no cash, it goes in the purchases journal. So each month, let's assume I'm preparing financial statements every month, I'm going to have a separate monthly journal for each of these. These are journals, original books of entry. If it does not fit in any of those 4 journals, it's going to go in the general journal. That's where I post the leftovers. That would be a journal entry for depreciation expense or something like that. So the first 3 journals, cash receipts, cash disbursements, and general journal, they are used under a cash basis accounting system. And for an accrual basis system, that means you have receivables and payables, accounts receivable, accounts payable, accruals. That would be used for an accrual basis accounting system. Generally, introductory financial accounting courses focus only on accrual basis accounting. Now I'm going to post these monthly balances to the general ledger. The general ledger, try to imagine a binder with a separate page, a separate sheet of paper, 8.5 by 11, for each account in the chart of accounts. I'm going to take the cash receipts journal totals for the month and try to visualize that as a single journal entry where I've summarized all the transactions for the entire month in a single journal entry with debits and credits. Cash disbursements journal, the same thing. Sales journal, the same thing. Purchases journal, the same thing. General journal, that's where the leftovers go. So it's the end of the month. I want to prepare financial statements for the month. And any cash receipts are going to be posted, this is posting, to the page in the general ledger for the cash account out of the chart of accounts. Any cash disbursements are going to be posted at the end of the month to the general ledger on that same page. And so on for each and every account in any of these journals. So the general ledger, I'm merely transferring balances for the month, posting, to a separate page for each account in my chart of accounts in what is called a general ledger. Journals are original books of entry. Ledger pulls all of that financial data together. Thank you.